in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving Iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois, and this edition of the Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. Chip, how you doing, man?
Hey, doing well. We've had our seatbelt fastened here the last week or so. It's been a really bumpy ride.
It is. That is a overstatement to say the least there. This today is a perfect example of probably the market realizing that, hey, we've rode this thing down far enough. I think before we started talking here, April 18th, we were at 383 on the March contract and about 494 or so, 490, something like that in the March contract. And here we are today. Rode this thing down to about some relatively pretty low lows, about got back into that 360, 370 range for sure, and now we're back up 7.25 here today on the March contract. So I guess as you take a look at the May contract, as you take a look what's happening there, I guess what's your synopsis of today's action, what you saw in the market?
Yeah, well, I mean, it's we are highly correlated to the outside financial markets and the stock market in particular. You got a lot going on here. As you mentioned, you've had a big sell-off in our grain markets, kind of led by the bean market, to a lesser extent corn. Wheat's had a sell-off from the highs, but it's, relatively speaking, held together better. So, this is about each new headline that comes out and each new news story about coronavirus. You had a huge break. I don't know what the total amount was at the lows, but we had to be working on 13-14% correction in the stock market in just a matter of days. And we've had a huge range in the stock market today. Stock market closed, I don't know where it settled, but at one point it was up 1,300 points. I believe it settled somewhere up around 1,100 or so, biggest one-day gain point-wise in history. Last week we had the biggest one-day, actually two of those in the same week, back-to-back, biggest point losses in history. There's a lot of optimism about there's a call tomorrow morning between the G7 kind of financial leaders, and there's some hope that there's going to be a coordinated interest rate easing and just pumping liquidity into the financial system across the world. And that was some of what, or maybe the majority of the reason the stock market rallied so much today. And then again, as we're recording this, here about a little after 8 o'clock Central Time, the stock market futures are up another 100 points here in the overnight. There's some hope, as I mentioned, that meeting could conclude by about 7, 8 in the morning, and that could result in a huge push of liquidity and lower interest rates into the system here. So, some of that's baked into the stock market. If they do it, if they do have this coordinated easing, that's going to lead to probably some additional buying in the stock market, and our ag markets will respond accordingly. So, unfortunately, we're really tied to the outside markets, the stock market. On its own, it's probably not as wildly bearish maybe as what the price action has been, especially the cattle market. But in times like this, the cattle market gets really highly correlated to the stock market, unfortunately. So we had some wild rides all over the board today. But that's kind of where we're at in a nutshell. This coronavirus is continuing to progress, unfortunately. More and more cases of it being reported. The market is expecting and hoping for some central bank lowering of interest rates, pumping liquidity. If we get it, that's going to lead to some more strength. If we don't get it, the market could be disappointed, and you could see the rug pulled out from under the stock market again, and another downdraft and our commodity markets following. So this thing's going to be really dicey as we go forward here. And unfortunately, the bumpy ride, the turbulence isn't over yet. It is not safe to unfasten your seatbelt in the cabin.
Yeah, it's things are going just crazy. So I'm looking at my alert here for today, or this evening, I'm sorry, and looks like corn May contract is up right now 1.5, and looks like December is up 1. May soybeans are up 3, and November beans are up 3.5. So I mean, they're kind of continuing the trend that we saw throughout the day today. To your point, everything is hinging on what's going to happen with these with the various banks and stuff that are out there that are going to start throwing some money at this. That also kind of that makes those rebounds a little nice for a while, but it also makes the contraction even worse. So it's kind of 6 1/2 dozen another sometimes when you look at that. But
yeah, it is definitely.
The one thing I want to throw out there is, the cattle market has been just decimated here since this coronavirus over the last week or so, and we saw some nice, like you were talking about earlier, saw some nice rebounds. Thursday comes an export contract or export report that comes up every Thursday. We start seeing those, and those are going to start being a bigger and bigger issue with this phase 1 deal and what we see happening. All the reports that I've read about China right now are kind of pointing towards their stock market is doing a very similar downward spiral that we saw in 2008, 2009 here in the U.S. As far as impact-wise goes. I guess we'll talk about how important these export reports are going to be moving into Thursday.
Yeah, every Thursday going forward is going to be highly scrutinized from the export sales report to see if China was in to our agricultural markets, and if so, what quantities, what commodities, what amounts. The other thing that's along with this bounce today that's given us a little bit of support, if you remember, the stock market was less than stable on Friday, but it seemed like our ag markets, at least the grain market, stabilized a little bit. Part of that is that tomorrow, as soon as tomorrow, China can start issuing import quotas, tariff, restriction quotas for U.S. agricultural products as part of this phase 1 trade deal. Will they do it or not with all the supply chain issues they've got going on internally and still, fighting, getting people back to work and still a lot of, people, quarantined in their houses and stuff like that. So they're still fighting this coronavirus issue in a big way there. It's really stifled their economy. But that's the other reason that the grain markets and cattle market, and to a lesser extent the hog market, gave a little bit of stability late in the week and then had that nice bounce today. Obviously following the stock market higher, but also some hope that maybe here very quickly, as soon as this week or next week, that China could potentially be in there for U.S. agricultural products. And as you mentioned, every Thursday will be watched pretty closely. And not only that, but every day, anything on the grains, anything over, I believe, 100,000 metric tons has to be reported to the USDA. So we get sometimes in the morning, between 7:30, 8 o'clock, sometime ahead of the market's opening, we get some flash export sales from the USDA, and so the market's going to be highly alert for China being in our ag markets here. Will it be? I think without the coronavirus, they very definitely here the first 10 days, 2 weeks of March would have been in for ag products. They have such a problem, with a slowdown of just getting people back to work and getting factories reopened, and there's big lineups to unload stuff at the ports because they lack sufficient manpower to do that. I don't know, but it's certainly a strong hope of our ag markets to see a little bit of Chinese business and some stability in the stock market. And, all of a sudden, we could be right back where we were before this whole coronavirus swoon started. But it will be very dicey. This, I can't stress enough that now the financial markets, the stock market is, anticipating a rate cut by the Federal Reserve and other central banks across the world. If they don't get it, it's going to be very disappointing to the market. If they do get it and we rally up, liquidity in the market and lower interest rates, that might stabilize this, but in the end result, that isn't going to make the virus go away. It's not going to make people not get sick. It's not going to make people leave their house and buy more, or go out to eat when they wouldn't, stuff like that. So is the bounce going to get met with a lot of selling still in the stock market? There's a lot of questions out there. It's definitely an environment that we haven't been in a long, long time, if ever. And it's very fluid. It's going to change by the minute and sometimes by the second. And just today, I think, illustrates, what you could see. And early on, there were some massive swings in the stock market. I mean, overnight, we were several hundred points lower. And, then it ended up at 1.13. I don't know what the swing low to high was, but it had to be, it had to be working on 1,500 points in the stock market. I mean, that's crazy stuff. And it wasn't just one way either. I mean, there was early on some really big, 200-point swings back and forth in a matter of minutes in the stock market. And as that goes, unfortunately, even though there's not a lot to do with, the stock market doesn't have a lot to do with our agricultural markets, there's still a high amount of correlation right now.
Yeah, the market was just nuts. I mean, like you said, it was 1,500 points in one direction, and it was 1,000 points out. I mean, it was just all over the board, man. And it was just absolutely crazy. I was watching it because I noticed the commodities, and I was kind of waiting for typically when you have something like this happen, you have the funds, they jump out of the stock market and come over to the commodity market, and they raise it up first, typically when you start seeing some kind of a downward trend in the market. And today was a weird deal where both of them came up at the same time, maybe not as much as one or the other, but man, I tell you what, it was still just it was a crazy ride what we saw today on the markets, no doubt about it.
It really was. It's been again unprecedented, and we saw a big rally in the oil market too. We're now almost I guess right at $5 off of the lows really from last night in crude oil. So you're talking about some massive swings here, still under, still only $48 crude oil. So that is at least the stability there has caused everybody, giving everybody a chance to take a breath and kind of reevaluate where we need to be. But a lot of things working, central banks, China, obviously, the further spread of this coronavirus. Is it going to continue to rapidly escalate, or is it going to slow down? And can you believe the numbers? There's a lot of back and forth on what you can believe, who you can believe, if we're getting the correct story from a lot of different sources. So,
yep, there's a no lack of information out there. So, a lot of craziness going on out there. So let's talk about the plan side of this for a little bit. So there's a lot of craziness going on out there. This is one of those key times where you really need to start looking at your plan and what you're doing and where you need to be at. I mean, we've come off of about 15 days of the market just getting lower and lower and lower, and then we had this shot up today, and probably tomorrow will be a similar episode, and then who knows where it'll go from there. Start looking at that plan, building that plan. What are some of the steps that you're going to tell your customers right now as you're talking to them to start looking at the plan, and what are some of that first steps you want people to take looking at what's going on here?
Yeah, if you're talking about a row crop farmer right now, corn and beans, this is definitely not the time to stick your head in the sand. First and foremost, we just set our spring price for crop insurance. Crop insurance plays a huge part of your marketing plan. So number one is getting a good handle on your crop insurance. This is not the year, given the risk potential. If coronavirus continues to get worse, if China continues to quarantine, hundreds of thousands of people and essentially close their country, it could get worse. And so crop insurance is really the place to start on this. And it's not the year to reduce coverage. In fact, it's probably a year to buy up coverage. It's the cheapest form of downside protection you can get because it's subsidized by the U.S. government, and it's cheaper than anything you can get, via some sort of an option trade. There's lots of private products out there that might fit to buy up that insurance a little bit fairly cost effectively. So that would be first and foremost where to start. What's your crop insurance? Probably before to start that is, which hopefully a lot of people have done already, get a good handle on what you think your cost structure is right now to put an acre of corn out, acre of beans out, and then layer on what's your crop insurance guarantee from a revenue standpoint, and where's the gap between where we're at currently based on average yields and where your crop insurance kicks in. And if that gap is big enough, do we go and look at a private product to buy up, or some sort of an option strategy, put strategy to, layer in and make up that gap? And then it's just a matter of getting targets on where you want to sell, how much you want to sell, and executing that plan and being ready to pivot. That's the biggest part. Is you don't just make a plan right now and say, I'm going to sell it all at $4. That's great if we never get to $4, or maybe something changes and we're going to go way north of $4. There's still weather in South America that can affect things on their second crop corn. Argentina's getting a little bit dry to finish their bean crop out here. So there's definitely things that are going to affect this market both negatively and positively. The two biggest right now: get your cost of production to the penny, as close to the penny as you can, and then figure out what your crop insurance plan is, what your revenue is, and then what the gap is between those two. And that'll get you a good start for then figuring out, what do I want to do for my next step? Do I want to sell? Do I want to use some option strategies, combination of both? We'd be in favor of, at least on a large portion of the crop, on rallies, leaving some sort of top side open. And you can do that by doing puts. You can do that by making sales and buying calls, which is commonly known as a minimum price contract. Because as bleak as it looks right now, the snap of a finger with Mother Nature in there and Chinese demand, we've seen how things can really change quickly. So you want to position yourself to try to be right no matter what happens in the market. And there's lots of tools out there available to put into your plan and execute to give you the risk management to the downside that you need and still leave some top side open. And I still think we're going to get rallies. We just have to be ready and willing and able to protect, take action at higher levels. So that's all in a nutshell, Casey. That's a long-winded way of what we're working on right now, trying to get producers, lined out with a plan right now.
Yeah, that's there are a lot of irons in the fire right now. If you look at some long-term weather forecasts that we see out there, I've read several of them that are calling for the complete opposite of what we saw last year, more of a early spring and a dry, hot summer. So a lot of different stuff out there on the horizon when it comes to just that forward planning part of your plan. So I guess, Chip, if folks want to reach out to you and pick your brain or ask some questions about a plan they're working on or just get your advice on what's going on, what's the best way for them to do that?
Best way is just call our office, 309-550-7213. We would love to chat with you. Low risk, low pressure. Just kind of tell you how you might be able to improve your marketing plan and withstand some of these big volatile swings.
Yeah, plenty of stuff going on out there, and plenty of guidance in this time of an impartial mind. Take the emotion out of it a little bit, kind of get folks led down the right path here. So, I guess Chip, I appreciate you being on the podcast. Any last things you want to throw out there before we shut it down?
No, I think you hit the nail on the head there. Second set of eyes and ears is really critical. In a lot of ways, you want to get your banker involved, your accountant involved. You need an extra set of eyes and ears on risk management for sure. So if it's not us, we'd encourage getting some sort of help because it just moves too fast. You need somebody that's watching it closely for you, so you know when to pivot and when to execute.
Yep, a lot of moving parts there. All right, well, I'm Casey Seymour with Moving Iron Podcast. Check out my social media at Moving Iron LLC on Facebook, Twitter, and Instagram. Also, check out movingironllc.com for all the latest stuff moving iron. And also got the Moving Iron Summit coming up here at the beginning of September, 1 through 3 in Nashville, Tennessee. Check out Chip. He's got a little social media presence out there, and it's what's your Twitter handle?
Blue Reef Trader.
Blue Reef Trader. Check it out there, and you can also check out Blue Reef Ag as well on their Twitter site as well. So I am Casey Seymour with Moving Iron Podcast and with Chip Nellinger of Blue Reef Agri-Marketing. So until next time, let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard work